Welcome back to Sam's Finance, and today I'm trying something new. I wanted to do a company and stock analysis again so badly, and my new take on this is the Quick Look series, in which I condense the most relevant information into a 10-minute video. Let's go! Unilever is an Anglo-Dutch consumer goods company with headquarters in London and Rotterdam. Since late 2020, the stock is now only listed as a British corporation. As a consumer goods company, it goes head-to-head with names like Nestlé, Mondelez, or PepsiCo. In terms of market cap, Unilever is considerably larger than Mondelez or Kraft Heinz and close to the size of Pepsi or Coca-Cola. Their product portfolio can be best described as a mix of Procter & Gamble and PepsiCo. Beauty and personal care products accounted for 41% of all sales in 2020, what makes it the biggest of the three Unilever divisions. Within this division, well-known brands include Dove for hair care, deodorants, body washes and lotions, Axe for male grooming products, Vaseline for petroleum jelly-based products. Then there is Lifebuoy soap, Clear shampoos, Radox bubble bath, Sunsilk, and Organics hair care. Food and refreshments is Unilever's second biggest division, and with 38% of the 2020 revenue, it's almost the same size as their personal care business. Probably the most popular brand in here is a Lipton iced tea, which is actually a 50-50 joint venture together with PepsiCo. The Pure Leaf Premium iced tea brand also belongs to this partnership. Knorr is a brand for dehydrated meal and soup mixes, prepared dishes, sauces, and other condiments. I myself often buy their tomato soup, and I think this definitely played a role in the idea for this video. Hellmann's and Marmite are two more sauce and condiment brands. Funny produces kitchen-ready potato products. All the other brands in the food and refreshment sector are ice cream brands. Langnese, together with the Magnum sub-brand, is presumably the most iconic ice cream brand in the world. Oh, and if you're now irritated by the name Langnese, this brand has a different name in every country. In their country of origin, Germany, the name is Langnese. In Southern Europe, it's mostly Algida. In the USA, it's Good Humor, and in South Africa, it's Ola. Only the Heart brand logo always stays the same, and you're probably well familiar with that. Ben & Jerry's is another high-quality ice cream brand, and Breyers, Popsicle, and Klondike further complete the ice cream portfolio. Last but not least, Unilever's home care division contributes 21% to the revenue. In there, you can find a lot of laundry detergent brands like Skip, Sunil, Surf, Coral, Radiant, and Persil. Yes, correct, the famous laundry detergent Persil from the German Henkel company is being produced and distributed by Unilever in France, the UK, Latin America, China, and Australia. The other home care brands are Domestos toilet cleaner, Sunlight soap, Comfort fabric conditioner, Cif general detergent, and the indoor air purifier Blue Air. Now, those were by far not all of Unilever's brands, as you might know from the video where I analyzed Mondelez. The consumer goods companies always have a lot of acquisitions going on all the time, because that is how they grow and gain more market share, by buying up other brands. Many of these brands might seem unfamiliar to you because they are only sold in emerging markets. And now that we are touching on this, Unilever makes a comparatively large proportion of its sales in emerging countries. Actually, the majority, 58% of Unilever's revenue, comes out of these emerging economies. The most notable emerging market, surprisingly, is not China, but India, where Unilever makes 10% of its global revenue. Also, Unilever is proud to be the industry leader in this country, as the #1 indicates. It also holds a good position in a few other emerging markets, as you can see. Now I wanted to check if Unilever's claim that they are the leading position, that they hold the leading position in growth markets is credible. So I checked with Mondelez. Here we see that they only make 37% of their revenue in emerging countries. Then, for the personal care sector, I looked at Procter & Gamble, and it turns out they only rely on emerging markets for 33% of their revenue, especially due to a high North America focus. Both significantly have less emerging market exposure than Unilever's 58%. So this huge emerging market involvement should be on your radar if you are planning on making an investment in this company. Now let's look at Unilever's stock performance. In the past 10 years, Unilever's stock returned an average of 9.24% per year, if we assume that the dividends were reinvested. Compared to the peer group of Mondelez, PepsiCo, and Procter & Gamble, those are solid returns. However, we can see the current share price is the same price one had to pay for Unilever in the beginning of 2019, 2 years ago. In the meanwhile, P&G and PepsiCo are rapidly catching up in terms of share performance since 2018. I will never get tired of this, but past performance is no indicator of future results. Keep that in mind. However, you now have an idea of Unilever's relative past performance. And as a last note on relative past performance, I prepared a shocker for you here, because over the last 10 years, you would have actually been better off by just buying into a boring S&P 500 ETF that returned 11.8% annually. Nevertheless, you can also see this outperformance wasn't consistent, but only started in 2020, most likely due to the tech companies that make up a great share of the S&P 500, and they obviously had a very good year in 2020 due to the big push in digitalization that COVID brought to all of our lives. If we now shift our focus onto Unilever's revenue timeline, we see a quite steady revenue growth until 2017. Since then, the record 53 billion euros in revenue could not be exceeded until now. So this stagnant revenue certainly is a rough cause for the stagnant stock price in the last 2 years. The revenue picture more or less translates into the net income or profit history, because in the consumer goods sector, profits are generated mostly by volume growth and not via price hikes. In 2018, the net income spiked to 9.8 billion euros, but I wouldn't read too much into that, since this was mostly due to so-called non-underlying items that are unusual items outside of the normal operating profit. That's why the revenue numbers always show a more genuine picture of the company's situation, since the accounting practices don't blur these numbers. Consumer goods companies traditionally are typical and reliable dividend payers. Unilever is no exception to this and has increased their dividend 21 years in a row by 7.4% annually and is currently yielding 3.6%. This is more than the 2 to 3% Mondelez, PepsiCo, Coca-Cola and P&G are yielding. So if you are looking for a well-positioned consumer goods dividend payer from Europe, you should have a closer look at Unilever. The current price-earnings ratio of 21 also makes this stock attractive. Now, in the end, I want to know from you, which Unilever products do you use and like? Do you own Unilever stock? And which company would you like me to analyze next? With that said, thank you for watching, and remember, just be lekker. Bye bye.